So we're here to talk to you about federal loans.
Oh gosh, what a doozy.
So what are federal loans? So if you applied for financial aid, aka you completed a FAFSA application,
Say that 5 times fast.
and you have a loan officer, you most likely have a student loan with the federal government. Yep. Well, technically, you borrowed money. You have a loan, right? And these loans, aka this borrowed money, you have to pay back, but you have to pay back with interest.
So there are 3 types of student loans that we're going to go over today.
Yep, we're going to be talking about subsidized loans, unsubsidized loans, and plus loans.
Yeah. So the nicest loan, in my opinion, is the subsidized loan. This is a loan that is provided to you by the U.S. Department of Education. And this loan is essentially for undergraduate students that show a financial need. So that means when you complete your FAFSA application and you get your EFC or expected family contribution, in that your school will see this person has a financial need and they will give you this loan. So there are a couple of things that make this the nicest loan in my opinion. First of all, it is only for undergraduate students, so bear that in mind. But the most important and the biggest deal of all is that it doesn't accrue interest while you're in school, which means that you're not paying for empty money for the 4, 5, 6 years you're in school. Who knows? And one of the other things to keep in mind is that this loan in particular has a fixed interest rate of 3.73.
Yep.
And so that is only going to be for the school year of 2021 to 2022. So be sure to check the link below in the description box for the most up-to-date interest rates, because that's going to vary every single year.
Yeah, do your due diligence. Understand and know your interest rate for that particular year that you are seeking financial aid.
Yeah. So one of the biggest things to keep in mind with this student loan is that there is a cap amount of how much you can receive. So for your first year, you're only eligible for up to $3,500. For your second year, it's going to be $4,500, and for years 3 and on, it's going to be $5,500. So like I said earlier, just because you are eligible for it doesn't mean you're going to get all of it, because it is based off of your financial eligibility and your financial need. So keep that in mind. In addition to all this money that they may give you, there's also a loan fee of 1.5% or 1.6% if you're rounding. And that's going to be tacked onto the amount of money you owe. I know, I didn't realize this was a thing until very many years later.
What?
And
there's a fee
I know.
for borrowing money, and you have to pay it back
From
and
the
with
government! Oh, so rude.
interest? Crazy.
I know. So the next loan, which is not as nice, but still very, very helpful to have, is the unsubsidized loan. Though these loans look very similar and really only have a 2-letter difference, they are so different, and it's very annoying. So just bear with us as we go through this, okay? So for these loans in particular, you are going to not need to show that you need any financial eligibility. This is not going to be based off your EFC. This is just essentially money that the school is able to give you.
Yeah.
So that's super cool. But one of the biggest reasons they're able to do this is because you are accruing interest while you're in school.
Oh, dun dun dun.
So we're going to go over why that is so important and really what that means to you in another video. So be sure to check that out later on. But for now, let's just stick to the topic, and we'll go on and say, not only are these loans going to be accruing interest while you're in school, they're also for undergraduate and graduate students, which is a little bit different. The interest rate on these can differ depending on what status you are. So if you're an undergraduate, your interest rate is going to be the same as the subsidized loans. It's going to be 3.73%. But if you're a graduate student, it is a little bit higher at 5.38%. And that's fixed. So that adds up. That really does. As an undergraduate, you are eligible for $5,500 your first year, and then $6,500 your second year, $7,500 third year and on as an undergraduate. However, those amounts do change if you're a graduate or if you're claiming independence. So check the box out on this side with all the up-to-date rates that we have right now. Again, this is going to be for your year 2021 to 2022. Always keep in mind what the interest rates are going to be because they're always going to change. It's honestly very frustrating to go and look back at how much interest rates change.
Yep. Do your due diligence.
So, on to the next one.
Oh, is this the big one?
This is the
plus?
big one. This is the plus and my least favorite.
It's gonna make you cry. Because unfortunately, you actually have to be credit worthy for this. There are really no limitations to this, just being credit worthy, unfortunately. And that is the eligibility. So these loans are for your graduates. They are for your professional students. They are for your parents who want to get you through college. Unfortunately, this is, one more time, this type of credit, this plus credit loan, you just have to be worthy, credit worthy.
Yeah. So they're not going to have as nice interest rates, although they will be fixed. They're just not simply as good as our subsidized and unsubsidized.
They're actually way higher. So right now, aren't they varying at 6.28-ish?
Yeah, they're varying, and
that's
they
so high.
are probably going to go up because let's be real, the interest rates right now are super low.
Yep. All right.
So your disbursement fee on this one, unlike the other two at 1%, this one is going to be 4.2%, which is a lot of money for you to pay just to get money to pay back. That's the simplest way of putting it.
Yep. And so these loans obviously accrue interest, and we are actually going to be talking about capitalization.
What does that word mean?
Check out our TikTok for information on capitalization and even an example. But capitalization, very important to this particular loan.
Yeah.
All right.
Well, thanks again for tuning in. We hope we gave you a little brief synopsis of what your federal loans may look like, and hopefully that helps you as you begin your student loan journey. Be sure to check out our other videos just for more tips, tricks, and facts.
See you Monday.